Good evening and welcome to tonight's CVVC Global Report event. My name is Matthias. I'm founder and CEO of CVVC. For those of you who don't know us, CVVC stands for Crypto Valley Venture Capital. We are a VC with a plus. The plus stands for two things. Number one, we invest in the picks and shovels of the space, equity of startups that build products and services based on blockchain technology. Number two, we have our own ecosystem business that we run under the brand CV Labs. This consists of co-working spaces. We do a lot of conferences, advisory, events, community services. Please check out our websites to learn more about what we do. Our CV Labs incubation program is for pre-seed and seed startups all over the world. We've just recently changed our conditions. Now we invest up to 135,000 USD in return for 7% equity. So that's a new deal that we offer to the startups today. For those startups that are a bit further advanced, seed, pre-series A stage, we have a direct investment strategy. Normally, we invest up to 500,000 USD. Our investment focus is very much on equity, but we do invest in token models as well. So please reach out if you have a great idea and want to get in touch with us. For investors that want to invest with us, we offer a range of different investment products, from traditional venture capital that mirrors our portfolio startups, up to a fund-of-fund approach, the digital asset type of investments combining the most promising global crypto and digital asset investment strategies. As you know, we have just published our CVVC Global Report 2022. Tonight, we have a panel discussion. Our topic is Global Players Reply to Global Challenges. This panel will be hosted by our very own Tracy Trachsler. She is our managing director at CV Labs. The panelists tonight are Roberto Materazzi. He is the CEO at Lukka. We have GSR's Alain Kunz. He is the director of business development. We have Rachid Ajaja. He's a founder and CEO at AllianceBlock. And then last but not least, our very own Lukas Etter. He's partner and head of investments with CVVC. I hope you enjoy our reports as well as tonight's panel discussion. Without further ado, over to you, Alain.
Hi, my name is Alain and I work for GSR, the biggest market maker in the crypto space. And in the following, I will share some observation we have seen in the market, the crypto market more specifically, since the Russian invasion and the Ukraine war started. I mean, the observation will be in four parts. On one side, we're going to look at the market reaction to the outbreak of the war. We're going to look at the debate about sanction. And then we're going to look at the privacy concerns that came up, as well as a new crowdfunding mechanism that we discovered. So let's start with the crypto market. When the wars broke out in Ukraine and it became obvious that Russia will be the aggressor, crypto market, as all the other risky assets out there, fell down, or the price dumped basically. And as the war was getting more intensified and the uncertainty grew, the price of cryptos fell further. Just one thing, that's a general observation we see for all market. I wouldn't say that specifically for crypto market. When we have a sell-off in the market based on a black swan event or something that wasn't priced in, we see a correlation going to one. Same for crypto. Then the more interesting part happened basically towards the end of February, when crypto started to decouple from traditional financial markets, mainly from the equity market. We saw that coming along with the shift in the narrative. On one side, it was observable that there was an increase for crypto demand based out of sanctioned region on one side. And the other discussion or narrative that we saw popping up is basically the utility of non-sovereign money. Gold was mentioned first, and as well Bitcoin as all the cryptos. That was the market reaction. Followed to that reaction and also the increased demand on the crypto side, we saw a debate emerging about sanction. In response to the aggression of Russia towards Ukraine, we saw many Western countries to coordinate and start introducing sanctions against Russia, the country, as well as individuals, Russians. And we saw like measures taken, like including a few Russian banks from the SWIFT, the international payment system. At the same time, the Western governments, as well as different regulatory bodies, started to worry that crypto could be used as a way to circumvent sanctions imposed on Russia, basically. Why was that a danger? Because opposite to the traditional financial payment system, crypto is peer-to-peer based. So there's no intermediary buffer between that can stop transactions or not. Others then started to argue, and looking a bit more on the data, that if sanctions are illegal and specifically designated individuals are not allowed to transact, that means the same for crypto as well as fiat. And at the same time, when we look at the Russian economy as well as the crypto market, it looks like the market is too costly, too small, and most importantly, all crypto transactions are more or less transparent as they happen on a public blockchain. Then at the same time, we saw discussion popping up on different institutions as well as regulatory bodies around the world that we need more surveillance and a better grip or understanding or regulation with respect to crypto. That was to be expected, to be honest. The more interesting discussion we basically saw popping up as several countries actually started to reassess their own currencies and their currency dependency, and then at the same time also where actually this currency or asset custodied. Because we found out very fast that if you don't do self-custody for whatever kind of asset it is, you basically don't really own the assets. At the same time, we had the outcry of the European Minister for Digital Transformation asking several crypto players to basically stop doing business with Russian people. The interesting observation we saw there, like centralized exchange like Coinbase and Binance resisted this kind of request because they lacked the legal ground to do that, and so they put themselves on the standpoint, as long as there's no regulatory or legal framework why we should ban every user that is Russian, we're not going to do it. But the more important thing was basically the DeFi space. We saw different DEXs, that's decentralized exchanges, like Mocha, an aggregator, which started to geo-block trades from Russia. At the same time, we saw Flexpool, an Ethereum-based mining pool, stop transacting with Russian IPs as well. And additionally, we saw OpenSea, the popular platform for NFT, impose suddenly sanctions against Iranian users, and the host of MetaMask, basically the backbone for all the DeFi space, also start to blacklist certain country, which basically opens up this discussion, or why, if it's called DeFi, if there's so much centralized power to actually discriminate against people, why the ethos, to a certain degree of ethos, is basically it's open for everybody. And beside this kind of privacy concern, we also saw like a new funding, a crowdfunding mechanism popping up based on cryptos. I mean, we saw that in 2017-18 with the ICO boom, but we have seen Ukraine receiving over 100 million in cryptos, basically donated for defense, to get fuel, to get food, to get bulletproof vest. We saw several crypto players like Binance, Polkadot founder Gavin Wood, as well as the Ukraine DAO popping up, basically inventing a new way to actually fund the governments or just support it without any need of any kind of intermediary. So now I'm handing over to Tracy and looking forward to an interesting panel discussion.
Perfect. Thank you so much, Alain. Yes, welcome everyone. At this point, I get to invite all of my lovely panelists to join us by turning on their cameras and their audio. Welcome, everyone. Thank you so much for taking the time today to join us as we touch on some very important topics. It's already been mentioned by Matthias, but I think it bears repeating. We have a number of lovely panelists joining us today. This includes Robert Materazzi, CEO of Lukka, Alain, of course, Director of Business Development for GSR, Rachid, Ajaja, founder and CEO of AllianceBlock, and Lukas, Etter, partner and head of investments at CVVC. Gentlemen, welcome and thank you so much for joining us today. Now, it's safe to say that crypto assets are no longer on the fringe of the financial system, and as such, it is increasingly relevant to examine how crypto markets react to and interact with macroeconomic elements. So tonight's discussion will touch on a number of different key topics, including inflation, geopolitics, and regulation, in order to explore how crypto fits into the bigger global picture. So without further ado, I'd love to head into the first question. Now, the outlook for global GDP growth has deteriorated significantly as inflation challenges intensify in the aftermath of the COVID-19 pandemic and the rising pressures of the war in Ukraine. We just recently saw the new numbers on the CPI side that were published yesterday or early this morning, which don't look too promising on the greater inflation scale. So Bitcoin is, of course, often heralded as digital gold, and many specifically point to it or invest in it as an inflation hedge. So my first question is this accurate? Or in other words, does Bitcoin truly offer a respite to investors looking to mitigate the effects of inflation? Robert, I'd love to kick this one out to you to start with.
Sure, and thank you for having me today. I'd say first, maybe just to expand it a little bit, the ecosystem that's investing in crypto assets is looking at a lot of other assets beyond Bitcoin. So I'd say Bitcoin's still there, clearly, still has the largest market cap. Ether, which is on the Ethereum blockchain, seeing a lot of trends where they're using that in a similar fashion to what you just described. And I'd say, generally speaking, maybe the top 10 or so assets by market cap. And for that reason, I think people are seeing longer term uncertainty in traditional markets, and particularly the last few years when we've seen similar situations, like when COVID hit and there were comparable macroeconomic factors, we saw initially the crypto markets kind of follow the traditional, but then there was actually a lot of momentum afterwards. So I'm hoping to see similar responses this time.
Rachid, to what extent do you think it still qualifies as an inflation hedge?
Yeah, so I think actually I will join Robert. So for me, so it's not just now about Bitcoin, but it's about DeFi. So DeFi, no matter what happens, so I think it will still be hedged. So I have few numbers actually. So for example, if we take UK, US, so UK inflation jumped to a 30-year high last month of 7%, for example. If we take the US, there was similar situation basically as the UK, inflation hit 8.5% in March. So for me, basically the Bitcoin is more and more connected to traditional markets and to equity. But if we take basically other assets, specifically DeFi, yield, being able to play with all innovation that DeFi gives us, I do believe that we can basically even outperform what happened on the inflation, and it can be and it will be hedged, which a lot of people are already doing it actually currently.
Yeah, and I mean, I think I agree to that, and I think also at the end of the day, there's probably not one single inflation hedge one should rely on. So it probably, again, similar in typical portfolio theory, a mix of several potential inflation hedges. So we're also, when we look at, for example, as Rachid said correctly, crypto is more and more correlated to the equities market or the public market. But if we look, for example, at the private markets, which we invest here at CVVC, I think that's also another blending some stake into a portfolio of that is also helpful, because it's by nature not publicly traded, so we cannot react as fast as others. So yeah, I guess a mix is at the end of the day what we're looking for.
I want to add something actually, which is personal observation. So as we know, the markets, like basically so specific in crypto, move with Bitcoin. So Bitcoin, then you have Ethereum, then you have other alts. And the thing is that every single project, when they create, I will speak on-chain data, basically when we have decentralized exchange or even centralized exchange, we have basically the pair between like Ethereum and the tokens. And actually what I have noticed that some projects currently they are going out, they are basically away from, let's say, the token Ethereum or the token Rapid BTC. But what they do with DAI, or specifically DAI actually. And then we see there is like they benefit from the non-correlation when market drop, basically. And it's starting to become, I see more and more projects going through this route. Of course, at some point we need to have disperse, but it's interesting observation, I think, in the market currently.
Yeah, and if I could add on to that too, because these are good points, and maybe for the layman's that are listening to this. So the reason why we're talking about Ethereum and all of the effects that Rachid just said is that today is the backbone of the DeFi ecosystem. There's a lot of other protocols that are emerging, but when people are investing in Ether as an inflation hedge versus Bitcoin, they're investing in an ecosystem, and they're investing in a ton more projects than just Bitcoin as an individual asset. And there might be a lot more volatility in Ethereum because of that, because it's transient, it's going into the Ether first, but then they're doing it to invest in, NFT projects and, really any DeFi projects. And then we're seeing a lot of other protocols that are trying to catch up to where the Ethereum protocol is today. But I think that's a really important aspect to be aware of, is that investing in Bitcoin is very, very different than investing in Ether because of how it touches so many other businesses and projects.
Totally.
I would add to that, to break the inflation question a bit down. The thing that was mentioned was like basically DeFi. I think DeFi, mainly built on Ethereum, offers us a good infrastructure to basically deploy our fiat currency and get a yield that is probably more representative of the risk. A simple idea about DeFi, I go to a stable coin yield farm, I get between 6 and 12% on my US dollar, or I can just put them in a bank and have 0 interest rates, plus I get some costs, plus the inflation on top of it. So DeFi is basically a good way to combat inflation, because you basically can outperform it. I would say the same thing for if you go down the risk curve with alcohol on NFTs. It's basically something that has a high expected return going forward than the inflation rate we are expecting. Bitcoin on the other side, I would say, compared to everything else, I would like to say there's Bitcoin and there's crypto. And most of crypto, as mentioned before, is basically some infrastructure layer or some kind of ecosystem or form of GDP you're going to participate in. With respect to Bitcoin, I would just say if you're not that into crypto, it's probably one of the best, if not the best, inflation hedge. Why is that the case? Most people have some kind of understanding why gold is adding value. And if we look at gold over time, it's very good in basically holding the value over 10, 20, 100 years. But it's very bad for actually transacting, because transferring value over a distance with gold is very annoying. Try to move around 100 million in gold. It's not going to be an easy task. And then if you compare it to Bitcoin, all the same argument is holding up. It's actually scarce. We know exactly how much it is. We know how it gets distributed. And then at the same time, it's also due to scarcity with an expanding monetary base, it should increase in value. So it should be able to hold the value over time if the monetary base is increasing, so we have inflation. But on the other side, opposite to gold, is basically a seamless way to transfer value over distance. So you just can think about it as being gold 2.0.
Yeah, perhaps I think you've done a very good job at summarizing what sort of sets this space apart and makes it a more suitable hedge. Let's then take a look at the individuals that have the possibility to impact the way that the market develops. So how do crypto whales as individuals that are potentially impacted by global developments factor into the behavior of crypto markets? Alain, you want to take this one?
Yeah, how is it the consequence to understand what crypto wealthy people think about the implication of the macro environment with respect to the crypto markets, or more what's their role is within the crypto market to help the development?
How does their behavior potentially impact the way that the markets develop?
I think that there's two thoughts. I mean, if you're in a whale, probably the easiest way is to find the correspondent player in the traditional finance markets. That would basically be institutional player, basically entities that move a large amount of money. Now, when we look at the crypto market, it's basically to the same issue with respect to liquidity. There's where GSR comes in as a market maker to basically help facilitate that kind of liquidity. The other thing is, but also the darker side of it. If you're like an entity with a lot of coins or a big percentage on the market share, you basically have the possibility to abuse that power to manipulate the market. As we all know, the crypto market is still a bit of a fragile market with respect to regulation. It's increasing and it's getting better, and the clarity is coming along. So what the biggest challenge basically, if you're a really huge whale, is how actually do you navigate the market without having a negative impact that could be seen as some kind of market manipulation.
Mhm.
I think one good example was, I believe a couple months ago, was Justin Sun, I believe, that had a bit of a major sell-off of his Ethereum, for example, right? He definitely influenced the market behavior for, I think, about a solid half a day, based on just his own personal decision to sell off when he did. So it's more a question of, how do these people, given this sort of democratized view of crypto, et cetera, the fact that you still have these individual, these individuals, let's say, spheres of influence within the markets, what does that mean for the, for the market development as a whole? I don't know if Robert, you have something or some thoughts to share on that front.
Sure, and it's actually what Alain was just saying kind of triggered some questions that I have for him. Funny enough, but I'd be curious, Alain, real quick, if you, do you see that these whales are kind of playing the role of what market makers would traditionally play in markets in absence of institutions doing that today in crypto?
I would say it depends. That's a nice way to dodge the question. I would say, like, the one thing, the example for Justin Sun, I would say, yes. I mean, there are big entities that have an impact. I mean, Michael Saylor is one, other OGs is, but is that really different to traditional financial market? I mean, the announcement of Elon Musk has had the same impact on Twitter than on the crypto side. But I would say, opposite to the traditional financial market, we basically, because it's on a public blockchain, it's very transparent. We actually can see the movement. And opposite, if we think about traditional financial market, which is more or less layered. So some people will always see the trades or the orders going through before other ones else. So the blockchain, or basically a financial system on the blockchain, basically equalize that, because we know the big whales wallet. You can track them. You can again see movement. They're a different way. You don't want to get too technical to front run them as well as that. So it's basically, yes, you have the impact, but at the same time, you also, everybody sees what you are doing. Right. Basically have an easy way to even out the game, I would say.
Sure. Yeah. And I mean, we do. I mean, what I see, we and for those that aren't familiar with Lukka, we service north of 400 crypto funds. And so we see a lot of the institutional movement across the crypto ecosystem, and and a number of OTC desks and exchanges and whatnot. There's a lot more loyalty, what I see in crypto, than traditional markets. And so what I mean by that is when the rest of the world that's maybe new to crypto, that's just gotten into it, and so institutions, banks, or other newer investors over the last year might be skeptical and are selling because they're like, "Ooh, I'm in the green, let me sell. I'm seeing a downward trend, or I'm seeing something in the news that makes me nervous." We tend to see those that have been in crypto longer just look at that as a very, very black and white opportunity to buy low, which I think is a very interesting dynamic. And I think that is what, when people ask me very frequently, "Hey, is crypto here to stay?" To me, it's not even a question to ask anymore. That's really only asked for maybe people that are new, that didn't already get that answer, last time there was crypto winter, or there were other different economic factors. So I know we probably tangented from your original question.
No, you brought up a very good point. If I can pick up on that thing, it's like, yes, you will have whale entities, especially if you have a new coin that gets launched. But we all mentioned before, there's like Bitcoin, but most of the other cryptos, they are basically like some kind of ecosystem. So you basically can think about it of a country, and you start out with some people taking the risk, like like the first settlers that went to the US, they took a shitload of land, but it was basically worthless because they need more people. So you actually need to find that balance out. And yeah, you probably see like a new coin trading $1 million, someone owns 100 million, but he will never be able to monetize that value out. So he basically has a very strong incentive to reinvest in that network, in that protocol, to let it actually grow, that at one point, at one future, I mean, there's value accrual, and then also giving him the opportunity to monetize certain value that he helped to build.
Mm-hmm. So I just want to add it like this, and this is back to your question, to your question, Robert, about manipulation. So in my opinion as well, so of course, not all the whales, but there are some whales that know the impact of doing transaction. Now we know that there are lots of transaction monitoring, so we can get notification if there is like X amount of Bitcoin or Ethereum or any tokens is transferred. And actually, this is a way also to make there is a fear on the community, specifically what we call the weak hand. So when they see, for example, large transaction, even though the whales will not sell them, so it can trigger some sell-off, which basically people that want to manipulate are able to buy low, I would say. So it's also like they have this powerful tool to make people basically live in a little bit fear. And we saw we see a lot of this on the crypto markets.
It's a good point. I would also think one thing that is lacking on the crypto market is basically a very solid option market or derivatives. Why do I mention that? Most of the thing that's traded is still spot. So you basically have the possibility, if you hold a lot of inventory, aka you're a whale, to move actually the market. But I think the more we get like perps, we get different kind of future option, like basically derivative tool such, which allows different other entities to risk management. It will actually even that out over time. I also think that. I think that's a lacking piece to also take a bit out of the volatility out of the market.
I'll tell you what, though, I think that's a very, very short-term thing. And over the next year, we're going to see that change. We're going to see the derivatives markets catch up materially. There's a ton of conversations and solicitations I know that we're seeing from pretty much everybody that are focused on building a more mature derivatives market.
Yeah, absolutely. And plus, I mean, I think it's also, at the end of the day, crypto is here. I mean, with the whole thought around decentralization. So, and as Alain said rightly, most projects, they want to build ecosystems. So the end goal is to include as many people as possible, right? So even when with launches of new projects where we might have whales, I think over time we will see less and less of those whales because it just naturally distributes to a broader community. And I think that's also what we are aiming for. And if you just think about projects that really want to engage the governance of the community, there's little sense in having it consolidated in the hands of few. But I think, I mean, let's not forget, we're still extremely early. So this will only take in the coming years. And I think that's also where I see a lot of opportunities for example, for Africa, where people basically they skipped the personal computer revolution and everybody has a mobile phone, so everybody instantly has basically access to a wallet where they might not be able to trade on the stock market. They are able to participate in the crypto market. Plus, let's not forget, I mean, most of the cryptos, apart from those Bitcoin and the likes, which are true financial assets, actually there's projects behind it, right? So we want to, over time, we probably want to look at them less of a financial asset and more of okay, there's a governance mechanism, there's a network value that is behind them. I think will be interesting, but we're very early, so we're getting there.
Yeah, and I just want to add that when you speak about the governance, actually, and to come back to the option markets. So indeed, there are lots of players speak. We saw a lot of protocol that trying to do this, but there is always problem because of the liquidity. So in the traditional market, of course, you have liquid option markets, so you are able basically to have your volatility surface. You are able to do the pricing, which is not really, like I would say, possible now. However, I think because of the decentralized exchange, and to come back to your point as well, Robert, because this is something that will come soon, we can see that basically, like even like people that are providing liquidity can provide protection. So it could be first degree protection, which is what confines delta, or let's say the second degree protection, which is the gamma. And then we can create these liquid markets actually completely decentralized, because the problem of option, even you have big players that are able basically to support the risk, which we don't have right now in the crypto space, or we can basically split this risk over a lot of people in decentralized way. And I do believe that this is a way to be able to create this liquid option markets.
Excellent. Perhaps to move now on from sort of individuals that have the power to influence the markets to sort of those macroeconomic events that definitely have an impact. Let's take a closer look at what that impact looks like. So at the beginning of the year, of course, the IMF officially warned that sentiment in equities and crypto appear to be increasingly connected, and raised this quote unquote risk of contagion across financial markets as a topic. Now, looking at the last 2 years, it does seem as though there is this, trend when the stock market falls, so does the crypto market. Looking at, May 2020 and the pandemic crash, now the reaction to the market at the beginning of the Ukraine crisis, the reaction from the market to the Fed rate hike, or the supposed Fed rate hike that now has been delayed. Why are we seeing this apparent rise in correlation, and what does this mean for the space, or how should we be responding if that is in fact what we're seeing? Rachid?
Yeah, so I have like few numbers actually. So I think this is really important point. And on my side, I've been since 2016 in crypto, and I saw this evolution actually on the market. So for example, in 2017 to 2019, we have the Bitcoin correlation with S&P 500, it was around 1%. Okay, and then it starts basically to go up until 2020, 2021, we are around 36% in terms of correlation. And now it's even more increasing actually. The thing is, and I think maybe Roberts can also have more about the data because of Lukka and data provider, we saw since 2018, 2019, a lot of institutional trying to get institutional basically platform to get the data. So this is off-chain data. So from centralized exchange. And then now we have this huge amount of on-chain data basically that is also available to institutional. We saw that and then they are interested basically in coming into crypto, Bitcoin and other currencies. So this basically bring all this correlation to goes up. However, so in my opinion, as we can see, when there is fear in the markets, and it's the way that market is moved, there is this high correlation between equity and even more than the gold. But once we start basically having trend, which is, let's say we are in the next iteration of the bull run, in my opinion, we can see the correlation between the Bitcoin and the equity market, because we will have a huge amount of liquidity that is not coming mandatory from this institutional. So this is my opinion on this.
Yeah, this was kind of, I guess I hinted at the answer to this question earlier. In my opinion, and obviously this is really hard because there's so many factors that play into this, and just, I'm sure everyone wished they knew the answer to this question for obvious reasons. However, I believe that short term, anyone that's risk adverse or there's uncertainty, we're going to see more correlation, where long term, I believe that's where they start to diverge. And so I think that's what's going to happen again here with crypto. And I'm pretty optimistic that I don't know how long traditional markets we're going to see the trends that we're seeing right now. I know there's a lot of analysts that are anticipating some very long-term consequences. I'm personally optimistic that we won't see anything long-term with crypto, and I think that any correlation is strictly short-term.
And maybe DeFi can save us as well, because actually more and more people go into DeFi. So maybe it can be leveraged basically to start to diversify our portfolio, I would say.
I look at DeFi as just more technology and more innovation. And so I agree, where I look at DeFi though, I'm skeptical with DeFi. And I shouldn't say skeptical, where I think there's room for improvement, which we've hinted at earlier is when it comes to risk management.
Yeah, of course. Okay, definitely.
I mean, I think we should also zoom a bit out, because we look back the last 2 years, what we did, we basically accelerated the rate of money printing that we started after the global financial crisis. So I would say we have generally see a high increase in correlation across all asset class, which is basically also a question, just because we print money on the other time, our interest rate is by zero. So forcing all investors are basically going out the risk curve. We have seen crazy valuation on the private markets. We have seen retail expanding from, let's say, the blue chip asset class to more fancy stuff, just in the desperate run of yield. So, and then we also say the correlation is also so basically a signal of adoption of crypto. Because when we look back, I would say before 2016, 17, when crypto was very fringe, basically you have people doubling in crypto, or Bitcoin was around then, or on the other side in traditional market. But our investor base is wasn't yet that overlapping. Then afterwards, we have like more and more adoption with Bitcoin than all the other coins. So we basically have more and more traditional investor, which then are basically, if they dabble in both markets, TradFi as well as crypto, are capital allocator. And they will just have the same herd behavior we have seen before that. But they basically also agree with Robert before. They are like, a lot of the cryptos are emerging countries, some digital countries. They need time. I mean, over 1 year, 2 years, even 10 years plus the Bitcoin is existence, it's so short if you're actually thinking about building a country from scratch. So I would say if we look back over the last 5 years or 10 years, the correlation looks much different. And I would say when we then look back 20 years from now, we're going to see it's going to be completely different, decoupled. I would say we're going to see the picture that we're going to have a lot of digital ecosystem, the different cryptos. We're going to have digital gold 2.0 with Bitcoin. And then we basically have the traditional banking infrastructure replaced by the DeFi rail.
Yeah, plus I mean, I think just adding to Alan's point, I think we see a lot of investors which are obviously exposed to the market, especially if I focus on retail, and they have maybe a bit of stocks and maybe a bit of crypto, and if one moves, they get afraid and take it out. So I think that is also where parts of the correlation come from, right? And maybe that's just a current effect because we have so many different crises, so to say. And I agree with Alan. I think we have to give the ecosystem time to mature, and then maybe this is less of an impact.
Yeah, it's not just countries too, right? It's the institutions that have all these projects that are underway. I mean, you look at any big bank, and they finally make the decision to get comfortable to launch crypto assets into whatever business it is, and they're never going to do all their businesses at once. It takes time, right? Like I mean, we're dealing with organizations that are enormous, that don't move as quickly as the crypto ecosystem or the crypto native companies. But I don't see any lack of interest. It's just simply they're still moving forward, and they're trucking forward, and they're watching the markets go up and down. And I agree with everything that both of you said. I think that all of those are going to contribute towards longer term. I'd say the one thing that I would add is I wouldn't look at these as separate asset classes at all. It's just technology that can be applied to any of them. Today, we see it applied to arguably some new assets that would be in their own asset class. But over time, I believe that's going to merge as well. And we're just going to be using this ecosystem and these frameworks to exchange all of the other assets as well, which will be exciting for everyone, I think.
I think the sentiment at the moment seems to be that we're still, in this onset phase, and there's a lot of work still to be done, a lot of public awareness that still needs to, let's say, be accomplished in order for crypto to be what it can and should be. So then let's take a closer look at something that has landed crypto in the headlines in recent weeks, of course, is the war in Ukraine. And I'd be curious. Of course, we found ourselves, with a key role in the discussions around the war in Ukraine, and we've seen a lot of innovative uses of crypto as a tool to offer aid, as well as a lot of government concern, over the fact that crypto assets would provide a means to evade sanctions and hide assets, etc. So I think two questions on that front. One, how does, let's say, this innovative use of crypto in a very public setting contribute to the understanding and view of cryptocurrencies or blockchain in general amongst governments and the public? And two, to what extent are these safety concerns, sanction evasion concerns warranted? Maybe Rachid?
So I would say, actually, the way to use crypto, like to go against sanctions, it already happened before. Like Venezuela, we say when they try to have petro, like other countries, they try already to use this. So, for example, for Ukraine, the good things also, like in terms of crypto, is that like we saw lots of. I think like you have like you have spoken about it before. So the way that lots of I would say groups or companies that try to help Ukraine. For example, like on my side, I saw there is Ukraine DAO that have raised like around $6.5 million like for the government. I saw multiple groups actually, because as you know, also in Ukraine there are a lot of developers, and they work with really most of the crypto companies, and we work also with Ukrainian. So we saw a lot of things, like especially in Twitter, the NFTs, and a lot of I would say things that leverage DeFi to be able to bring, I would say, help to Ukraine. On the other side, so this is, I would say, the positive way, but of course it could be used to bypass now the sanction. But now I would say, so this is what brings us to the regulation, and like in my opinion, basically what is happening with MiCA regulation later on is that we need to have this kind of, I would say, not strict regulation where you cannot do anything or we need to block people, because as it said before, DeFi is basically open, is decentralized, and it's thanks to the community that we are here. It's not because of the institutional. However, we need to give the opportunity of, like I would say, users to choose if they want, for example, if we speak about trustless identity, if they want basically to show their identity to be able to interact with projects, and it should be done also in terms of the government. So I think like this is my opinion about this. And if we want to bypass the sanction, we spoke about blocking IP. So of course we can, like people already like at some point, I think MetaMask, they have blocked Venezuelan people to be able to receive, for example, stablecoin, USDC. But at the end, they use VPN in order to receive them. So there will be always way to bypass sanction. So I think we need to go much more deeper than that if we want really to provide framework to be able to respect the rules, I would say, without breaking the decentralization philosophy of DeFi.
I mean, to pick up, you do two questions, Tracy. What you basically did with your question is you showed the trade-off, or basically the utility of non-sovereign money. Number one, I mean, we saw the powerful mechanism to transfer value in form of monetary value to the Ukrainian people to basically buy food, buy supplies, and help out without anybody can stopping it. And everybody of us that has probably internet access can participate on that. But the other side, if we have such a money that is so easily transferable, it can be used basically by everyone else. Now, the question with sanction is, I mean, sanction, as far as we see them, they apply to fiat as well as crypto. And there will always be some kind of ramp off or on ramp where basically gateway between crypto and fiat that needs to be crossed. And that's the easy way where you still can implement sanction on that side.
Yeah, I think it's probably worth pausing and just, I think, probably speak for everyone. I have the utmost respect for the Ukrainian people and their leadership and what's going on there. And I think what everyone said here, I mean, this is really, really intricate. And Alain, what you just said, right, I think is worth elaborating on is that, right, I mean, there's where technology improves the transfer of assets, it's going to affect all good and bad people, right, on both sides. And so maybe there was some initial skepticism on avoiding sanctions for bad purposes. But we've also seen a tremendous impact, and people can be very, very responsive to support Ukraine. And I know I've seen that personally. I've seen it with our employees. We've seen it with family and extended, pretty much everybody that I interact with. And so I think that's worth emphasizing. And I think there is there is absolutely a lot more transparency that we can add with the right tools to help prevent some of the bad actors and those that are supporting Russia. So I do look at this. I think there's so many more positive aspects related to the crypto ecosystem in both short term and long term to support situations like this and what Ukraine is going through.
Yeah, I would completely agree. I mean, at the end of the day, technology is always neutral. I mean, the internet brought us a lot of good things, but also a lot of bad things on the other side. I would say, I mean, everything in crypto is still on a public blockchain. And even as you mentioned, we probably don't have yet all tools, but there are different analytics company. It's always stored there. It cannot be changed. I see it as a bit like doping in cycling with Tour de France. I mean, the moment they started to took your blood and urine and just freeze it away, you basically became short Theta with respect to technology, because it's going to take 1 year, it's going to take 5 years, it's going to take 10 years. But then the tool will be available. We saw it recently with the Bitfinex hack money that got recovered after several years. And different analytic company, they will come up with solution to basically be much more transparent with value movement through the crypto universe compared to the transparency or lack of transparency we have on the traditional financial system. So I'm very hopeful that the technology is going to be massively net positive for society.
Oh, yeah, I mean, I can fully agree, and it's also what we're doing here at CVVC. I mean, let's face it, at the end of the day, if there will always be criminal activity, no matter whether it's in crypto or in fiat, and if anybody wants to be criminal, there's probably always one or the other way, right? But I think let's, as Alain said correctly, let's focus on the positive. I mean, the fact that we can, in a relatively convenient way, bank billions of people that are currently unbanked, I think the net positive effect is just much greater, and I think that's what we're all here for.
Yeah, I think looking forward into where we want to head as an industry itself, and I think it's something that's been touched on by a number of different people in the conversation already. Governments obviously can't control cryptocurrencies, but they can influence local regulation, public perception, etc. How have we seen this in action? So the spread of, let's say, misconceptions with regards to energy consumption, China's crypto ban, etc. And how does the market respond to these tactics in action? Maybe Alain.
How does the market react? I mean, the market always reacts to the news. If something comes back from the regulator, the market interprets it with a higher beta, and the market goes down. If it's good, it probably gets too positive. That's just the attribute of a developing market. Then on the other side, I would say government cannot control crypto, but they also not control fiat money. I just need to look at all the bank fines paid in the last 10 years, or looking at the inflation numbers. It seems to be out of control. But what is really important, and I think we, as well as everybody else here on the panel, we probably are talking to, let's say, big institutional players, which are like opinion former or opinion shapers in the space. And it's basically on us to take on that role to make sure that we provide education, that we set by ourselves, even beside the fact that the industry is not yet regulated, that we basically take the existing framework and basically are good actor in the space. Don't try to arbitrage everything out. It's the same thing. I saw, I think it was beginning of the year, with when we saw different kind of lobby organization popping up. I'm going to see that the next 2-3 years, we actually going to see more and more that the crypto industry gets organized, that they're going to support lobby organization, that they actually will have a true voice that also get listened to by side of the governance. And the other thing is the regulation won't be as good as it could be, but it won't be as bad as it is. And I would say at the moment, any kind of regulation is some kind of additional information which takes out the uncertainty, reduces the volatility, and is net benefit for the industry as a whole.
Mm-hmm. I want to add to that. Yeah, sorry. So I want to add to that. So I will speak I would say the community perspective and what I observed myself since 2018. So back then, of course, we had the ICO, so the lot of scam, and then, but even though we saw when we were speaking back then into regulation, KYC in the crypto space, it was absolutely no way. The community was absolutely, so even it could have an impact on the market, basically, if there are this kind of regulation. And then I saw, of course, not all countries, but specifically in Europe, of course, the US, when we started to see, I would say the DeFi, we see the government that are trying to do regulation. So the community, in community perspectives, they try basically to accept this idea about decentralized identity, about the KYC, about AML, because at the end, why regulation exists since the beginning is to protect the retail. Definitely, okay? So we can see it this way, because if there is no regulation, we see all the pump and dump, all the, I would say the rug pull that is happening on the DeFi space, and millions of dollars basically that are lost and what people lose. Now, if we speak about, for example, what is happening on the regulation on the VAT, travel rules, actually. So we saw that even in terms of the community, they are trying basically to invest into projects that are taking this into account. Because at some point, as we say, if you are basically in the Wild Wild West, you play with no rules, but at the end, you need to be ready when you have the rules. So I think this is exactly the perspective that we have now. So, and the community are starting. So for example, they spoke about tax. Lots of stakers or liquidity mining, they try to get their tax reports because they want to be in line with the jurisdiction where they are, okay? Now, if we speak about institutional, and I think this is exactly what will open DeFi to the institutional cannot come to decentralized exchange, for example, Uniswap Balancer. They cannot go into the yield strategies. I'm speaking about regulated like financial institution, not of course the crypto fund and non-regulated fund. And these guys, basically, if you want to enter to pool of liquidity and to be able to get this yield, you need to know all people that are inside, basically. So KYC, like who is there, and so on and so forth. So this is why we saw, for example, Aave Arc, which is fully for institutions that are doing peer-to-peer lending and yield basically between them. So the evolution is 100%, in my opinion, is basically to have this regulation to protect the retail, to make sure that institution can come to DeFi, okay? But on the other way, we cannot make this regulation mandatory to everyone. This is why we need to be in the middle. It's not like all your data need to be basically like seen by everyone, specifically if it's like I would say for the interaction. So the retail, I would say the user need to choose if he want to interact with certain project or to do investment or to do lending. So if he accepts to be able to do it with this company, let's say, he can give access to his data, but he's not but he cannot basically just by coming to DeFi, bring in all his data, because this will completely break DeFi, and DeFi exists only because of the community and not because of institutions.
So you think the industry needs to display, let's say, a certain degree of flexibility in order to meet those standards or those needs halfway, at least, in order to be a fitting, let's say, a fitting model that sort of is able to receive that influx of capital. All right.
We can do it, for example, like let's take example of Uniswap, okay? So people with like institution cannot provide liquidity because they can be someone that is doing money laundering or whatever, okay? But imagine that you have 3 categories of pool. You have the first category of pool of liquidity. They are fully for institutional. So you need to have your KYC, KYB to be able to go to this pool. The second category is basically just all individuals and institutions that are KYC. So it's less than the first one, but you need to have KYC verified in order to enter to this pool, KYC and AML, okay? And the third one is completely open, like what we see now in DeFi. So, and there are now technological tools to be able to do this. Like we can do it with NFT, we can do it with oracles, we can do it with all these things. So this is where I see the thing. So keep it open, but have degree of restriction. And if the user want to go to a certain, I would say, specific pool or specific yield or specific, he has to give his data. So in this case, he need to give his KYC, AML to be able to interact with this.
Yeah, I mean, sorry, just to add, I mean, if we take one step back, I think regulation is good and regulation is a good thing. I think one thing that we have to pay attention to is regulation can also kill innovation in its infancy. And I think there's so many new things that come into place and just need to unfold a bit. I think it would be a shame if we try to push the new features into a old framework which maybe exists from the last century. So I think there should be a balance between like regulation and also enabling new.
I would add, and also the problem actually, so like the regulation, when we saw even from the subprime, even after what's happened is regulation that are just solving problems that happened before. They are not forward looking. They just do things that happen. So actually, and the funny story as well, when you do like some kind of regulation that are strict, like always people will find ways, innovative ways to be able to go beyond this regulation, and then the regulation need to keep up. So there is always like a huge gap between the regulation and, like, as you said, the innovation indeed.
I think one thing, I hope we won't have too much segregation within the DeFi space, because if we then have different, let's say, classes of investor depending on their KYC, I think that's going to look very fast, very similar to the market infrastructure we have in the traditional financial world, which is basically layered and different people have access to different one. I think the beauty of DeFi is basically making everything equal. I could see a world, people inherently lazy. So I think the ID problem is basically how KYC, taxes, onboarding is done. It's basically like in the analog physical world. And the DeFi is like the digital world. We just need to map it. And I think a big issue is essentially because the identity or the concept of identity is owned by the government. We need the government basically to issue an ID token for every person. And then you basically can build the whole DeFi infrastructure. You can use different kind of zero knowledge proof that you only need to give that kind of information to whatever platform you want to access that is absolutely needed. And then you basically will have the assets or the utility or the governance token. And the other side, you have the ID token. And then you basically just going to navigate it. I don't think most people really have an issue with KYC or AML. I mean, just looking at most people still trading on centralized exchange, how most people are actually funding their MetaMask wallet is they send the money to Binance. Binance has your ID. You send out the data to your MetaMask wallet. I know exactly what it is. I just need to ask Binance and get them to give me the information, whatever exchange it is. So just issue a token, and then you have the utility governance and the ID token, and then you just have like a two-token system to navigate the whole DeFi, and I can directly interact with institutions. I would much more prefer that the end game looks like that. I see AVR and some other solution like that, but I just think it's going to be like an isolated system. Just imagine just banks being that DeFi pool. There's already an interbanking market. Why would the condition ever be different than on the DeFi? If we think about DeFi being the different kind of mid-office and back-office infrastructure.
So
Robert, I think just a second, because I think Robert's itching to drop his comment.
There's a lot of good topics here, and everyone's getting a little bit to some solutions. I think at a high level, I mean, my opinion, we need regulation. It serves a very important purpose. It is absolutely contradictory to innovation. I mean, that's by design. If innovation always worked perfectly, we wouldn't need all this regulation, right? I mean, it wouldn't, but that future, I don't think will exist anytime soon. And so what I would like to see, I think, is that, and a couple of you touched on this already, right? Like the rules that we've written today, we're solving old problems. We need to look at the old problems. We need to adjust them for what our new problems are, right? And we need to come up with thoughtful ways to adjust those. But what I would like to see regulators, and I think they are doing this some, not always, and maybe not initially, is that avoid forcing crypto into the old rules. And I would like to see regulators and governments actually start innovating more instead of just trying to figure out how to govern. And I think that would hopefully enable them to actually govern all this a bit more wisely. And that's what I think is lacking. I mean, there's a lot of attention, there's a lot of meetings, there's a lot of collaboration, there's debating between institutions and investors and governments and regulators. It would be nice if the governments and the regulators would actually begin innovating a little bit on their own here, instead of just trying to figure out how to create a new set of rules for something that's this revolutionary. I mean, it's that material.
I think this is a very nice segue actually into sort of our closing discussion. So we can turn the tables a bit, right? We've talked a lot about how sort of macroeconomic and geopolitical shifts affect crypto, but how can or will this space influence or contribute to macroeconomic or geopolitical shifts going forward, right? What needs to happen in order for the space to achieve that necessary level of quote unquote influence, Robert?
Yeah, I think I kind of just answered a lot of that, honestly, with what I just said, right? I mean, I think it's a lot of the same. I mean, it's more collaboration, it's more communication, it's a lot more education on all of these topics, so that when we are brainstorming any one of these problems, that we're doing it the right way, and not putting something in place and then undoing it, right? Because then we're going to slow down, and the innovators, like I forgot who said it earlier, but they're innovating so fast and they've got so much capital, they're going to find ways to go around rules that don't work anyway, which is not the right answer. But they're going to do it. So I think it's that collaboration by pretty much all of these stakeholders.
So I think, like, as you said also, Robert, so like we discussed this before, but for me, like, so our focus, like for AllianceBlock, is to be able to bridge traditional finance and decentralized finance. And the big problem that we see when we speak with banks, financial institutions, they are not able to go to DeFi because of regulation, because of lack of KYC, because of lack of AML, so you see some private banks that are proposing staking, they would like to propose yield, but they can't propose yield because if like in terms of, I would say legally, you need to KYC every single person that is basically borrowing from AV, let's say, which is absolutely impossible. So for me, in my opinion, and what we are observing in the market, if we want to bring the value basically to DeFi by having this institutional, we need to have this set, I would say, of rules. I know that you don't agree with this, Roberts, but unfortunately, we need this kind of KYC, AML. We need to have some standardization that need to be taken into account by all these, I would say, regulated institutions, because we see, of course, even some regulated entity, they have unregulated fund in Malta. They are basically to put millions and billions into DeFi. But if we really want, and if we come back to institution, we have seen a huge investment into custody and infrastructure solutions. Then we try to see basically now huge investment into data. And I guess, Robert, you see this as for the Lukka, we saw 35 million for coin metrics. We see all what happened with Dune Analytics, huge, because you need data to be able to build your strategy. And then we will start seeing platform, as we call it in finance, OMS, EMS, PMS, so execution layer, which need to use DeFi. But if you want to do it, you need to have, I would say, at least this regulation layer. When I speak regulation, not board, of course, KYC, AML, to be able to know with whom you are interacting.
Yeah, I mean, one thing I would add, and I agree with you, I think, but I guess one of the points that I'm trying to make is that KYC and AML is serving a very specific purpose. Instead of saying we need KYC and we need AML and we need to apply it to crypto, and I'm not saying this is necessarily an answer, just to give an example, is why are we doing KYC? Why are we doing AML? And there might be a different way to solve the same problem without actually doing KYC and AML. Or maybe that is the right answer for what we're experiencing right now. But I mean, I think that mindset is very important as we solve these problems.
I think how we get the hearing and solve most of the problem is basically the leading player in the crypto industry, whatever domain or niche they occupy, just need to be involved in two activity. On one side, they need to make sure education is proactively shared. And I think that happened in the last 2 to 3 years. Before that, crypto was more like a seek and hide game. They tried to avoid everything. But now the crypto industry is massively financed. And now we have the power to stand in the room and make sure we get voice. And I think the process is just happening. And then the other thing is for our side, because we're like a trading house and we're rather big, I think we need, and as well as other players, we need to act as a good market participant. We all have some kind of background in the traditional financial market. We know how a properly working market looks like, and we know what's good behavior and what's bad behavior. And just because we know we could get away with it at the moment, we shouldn't engage in it, but we should be on the moral high ground. I mean, for our company, we're involved in several initiatives just about how the market should be regulated. And we just have, I mean, I don't believe that the regulator or the government will ever become an innovator, but I think we as innovator or let's say on the leading edge of that industry, we can proactively go to them and actually lead them. And I think also on a more abstract level, I mean, Switzerland got very wealthy with having smart regulation with banking for a lot of time. I mean, the US with embracing technology, Silicon Valley, that generated a lot of wealth for them. And I think whoever attracts crypto as a domain or basically in their country, I will see the next year it's going to flip around. I think countries will become cheerleader for different companies. I mean, you saw it. We were 2 weeks ago in Dubai. I think Dubai is finding out, okay, natural resources will end at one point in time. I should have something else. Why not look at this digital assets, digital economy, this token stuff? And they're playing a leading role. And also the US. I mean, when you look at Texas, I think they were going to be very happy about China actually banning all the miners. So we saw the EU doing a rather unsmart move with their hostile stance with respect to unhosted wallet. But then a few days later, we see the UK coming out and say, we want to become a crypto hub. I mean, why not? I mean, London, the city, is a big hub for FX, banking as well. So why not crypto? It will give an even edge. So I think all that forces will work together and it's going to be a nice outcome. We just need to be patient.
I think you're definitely painting a very, very nice picture for the industry going forward, Alain. All right. Well, unfortunately, that is all we have time for today. I do want to be mindful of everyone's time. Thank you so much for joining us, participating in this discussion. It's been a real pleasure having you all. For those, I know GSR, AllianceBlock, and CVVC, of course, already have a substantial presence in Switzerland, in Zug, where CB Labs is located or headquartered. And we're quite happy to welcome Lukka at the end of, I believe, next month. So for those that are, eager to learn a bit more about Lukka, meet the local team, and are looking to, just get in touch, please do make sure to stay tuned on the CB Labs channels and on the Lukka channels to keep an eye out for their official welcome event, which will be taking place next month. All right. Thank you so much again to everyone joining me in the panel, to those joining us online. It's been a real pleasure, and have a very nice day. Thank you, everyone. Bye.
Thank you.
Thank you.
Bye-bye.
Cheers. Bye-bye.